Good morning, good afternoon, good evening. My name is Brian Kahn, and we're going to be together for the next 30 minutes or so and while I conduct this webinar titled Swing Trading Using the Hourly One Chart or the 1 hour chart. There you have my name, you have my email, and then you have the place that I post almost every day on the IBFX dailyforextradingedge.com website. Not only do I post there, but there's a lot of other great collaborators that are putting together some great commentary with various opinions, various strategies, so make sure you take advantage of that. And I'll show you some links to some other resources later on as well. As you know, I always like questions, so feel free to use that question function at any time throughout the webinar. I'm going to go ahead and pump this up so that you can see this a little bit larger here. And then I'm going to go into our first slide, and it looks like we already have a question coming through. So before I do that, let's just go ahead and go through and do our disclaimer that we always do. So I'll just leave this up for a brief moment for you to see. So again, we are trading leverage products, and we want to have a trading plan with stops and with targets for every single decision that we make. The next slide, and then I'll just leave this up here as you can see where we're going. I always like to try and provide an outline. No matter if I'm talking about a specific technical analysis subject or fundamental analysis, which we'll be covering a little bit of both tonight, I always like to talk about trading psychology. And the first question that came across tonight is, what is the best strategy to become a successful trader? And so I think that most of you have heard me before. I talk every couple weeks via webinar. I also post, like I said, almost every day on the dailyforextradingedge.com website. You know that I talk about you as an individual trader and as an individual trading entity. And until you understand what's achievable from the markets and how many trades you should be making, how long of a time frame you should be looking at, how many pips you should be risking, how many dollars of your account you should be risking, and what's achievable really given your situation and your quote-unquote trading personality, I think that it can be hard to have success. So to have success, you have to approach the markets very realistically given your individual situation, and that's something that I help with. If you want to you're welcome to email me if you have more questions, because obviously that's a personal question. That's not something that I could answer here on this because I don't know enough about you. So if you have some questions on that, you have my email. You're welcome to reach out to me. Let's cover some fundamental analysis. Let's cover technical analysis, and then we'll get into swing versus intraday trading, and then chart analysis and moving you from macro to micro trading timeframes. Fundamental analysis, just a quick discussion of current events and what they mean for traders and investors. These are tools that you can stay on top of that fundamental analysis. I mentioned your broker provides great content. Forex Factory is a link that they provide, and that gives you your economic calendar. A TV station, CNBC, or some version of it around the world, and then other websites such as Bloomberg, which is a TV station. You can stream it online. Or just go to their website to read some of the great headlines that they're providing for regions around the world. Pretty funny about how I posted an article on low volatility and being cautious in these markets yesterday on Daily Forex Trading Edge, so I encourage you to read it. And it just talked about the Forex markets as a whole, the carry trade, the different central banks around the world, and what they're doing with interest rates, and some indecision on the parts of big traders out there, big banks out there, big pension plans and things like that, big companies that take advantage of that carry trade where they sell a lower interest rate carrying foreign currency, and then they try and buy another one. But in this whole kind of global accommodative easing and policy where they're lowering interest rates, they were just talking about that carry trade being a little bit more cautious going into it. So some of you use that, and it's a longer term trade. A lot of you are shorter term traders. That's what we'll be talking about today in the 1 hour charts. So it may not affect you, but the article is pretty good. But then all of a sudden I posted yesterday, and then all of a sudden the markets go ballistic today, so that's good. So maybe there'll be some higher volatility coming. bottom line is central banks are still stepping in. We heard from the Bank of England today, and they said that they're there to provide more accommodative stance, more accommodative easing, more liquidity as needed. So yes, we're seeing a little bit of volatility here, but in the past, every time there's volatility, the markets, the equity markets then shoot up because the central banks step in, and the volatility goes back down, as you know that relationship very well from my teachings here as far as what does a rising equity market do for volatility, which to me, volatility really means opportunity. So overall, economic growth around the world is still really, really, really bad and getting worse. It's been like that for 8 or 9 months, but the stock markets until just a couple weeks ago have done very, very, very well for the most part around the world. So keep that in mind that it is a very, very busy week. If you're aware of forexfactory.com, if you go there, you know that the Bank of Canada talked today, Bank of England talked today. We have the FOMC here in the U.S. Tomorrow. So lots and lots and lots and lots of economic news coming out of these central banks and these central bank heads, and they're the ones who are really driving the market. So be aware of that. Technical analysis. 3 major words out there that I think can help you to be successful. Understanding trends and which way the markets are going, understanding support, buying where other people are buying at, and resistance, buying at levels where other people are selling at, and then understanding the bigger, broader picture, USD, equity markets, volatility, trading ranges, and building trading plans using multiple markets as you can develop trading edges that way. Again, as you saw in the disclaimer, there are no guarantees. That's why we always trade with trading plans. We always have predefined stops, predefined targets. We manage the trade from beginning to end, whether it's a intraday trade or it's a longer term trade. And we also trade with the appropriate account risk and trade risk for our personal situation and that specific trading opportunity. All right, so moving from technical analysis, the slide, into kind of the meat of today's lesson, swing versus intraday. Intraday, are there enough opportunities in these lower volatility markets for intraday trading? Today, in the past couple of days, obviously trading ranges have picked up a lot, so maybe the past few days have been different than what we've seen over the past few weeks. Swing trading, in low volatility markets, can you stay in a trade longer? So when the VIX is lower, when trading ranges are smaller, can you kind of look and say, okay, I'm usually an intraday trader, but maybe there's not enough opportunities that maybe I take a little bit bigger of a picture instead of risking 10 pips to make 12 pips or risking 10 pips to make 15 pips or 20 pips. Maybe I can't see that in a range that's only 40 or 50 pips. I might have to kind of look at a longer term chart instead of intraday, maybe look at 30-minute charts and hourly 1 charts and hourly 4 charts where we're going today, and then I can go ahead and develop a trading plan and maybe risk 20 or 30 pips to risk 50 or 60 pips over a longer time frame. All right, so that's what we're talking about today, is lower volatility markets and then developing trading plans. Use the larger support and resistance zones. So as an intraday trader, when you're trading for just a very small amount of pips, you're using what I call very local zones. Here, I'm going to show you we're going to use larger support and resistance zones where you can give the trade a little bit more room to make a little bit more over time, but obviously there's always the risk reward there, so there are no guarantees. So we just realized that our trading plan has changed a little bit. We're either going to have a winner or a loser, and we're just willing to risk a little bit more in pips to make a little bit more in pips, but we might have to cut down how many contracts we actually do, because we might be used to, as a day trader, to risking 10 to 20 pips. Now we're risking 30 or 40 pips, so maybe we just cut our trading account in size, or trading contracts in half, and we're really risking the same amount. So if I'm going to risk 10 pips and I do 5 contracts, I'm only going to do 2 or 3 contracts if I'm going to risk 20 pips. So I'm just changing how many contracts I'm doing. All right. So let's get into some chart analysis. We'll move from macro to micro. I want you to be able to get your bearings, all right? So we're going to start with a longer-term time frame, daily. Then you'll see we'll move to hourly 4 charts, or the 4-hour charts, and then the H1 charts, the 1-hour charts. So I'm just going to go ahead and I'm going to switch applications here. And I'm going to reach down, and before I go into the charts, I'm just going to show you the Forex Factory site and how busy it is. As I said, Bank of Canada, right there, we got information from them this morning, and the Canadian against the U.S. dollar really moved. Then we have tomorrow, as I said, very busy day. We have the ECB, Draghi speaking. We have Bank of Canada talking again. We have the FOMC talking again. Today I mentioned Bank of England Governor King talking about providing more liquidity. So a very, very busy week as far as speakers go. Thursday, durable goods, which is a big, big number in the U.S. We have claims, which we're focusing on because of the jobless data and unemployment rates. So that's another big day of data. And then Friday, it slows down a little bit. We do have advanced GDP, but overall a little bit slower as far as the speakers go. And then obviously next couple of weeks, we have elections in the U.S. that a lot of people are watching. So busy, busy, busy economic calendar. We also have a lot of manufacturing data in the U.S. and unemployment data coming out in the next week or so after this. So lots and lots to digest as a trader, and hopefully that'll have some volatility pickup, but obviously no guarantees. So we want to be able to trade in high volatility markets with big ranges, and we want to trade in markets that are lower in volatility. And just to show you this volatility, I'm going to bring up TradeStation here, this platform, and I just want to show you the VIX. And the VIX as of late, we'll take a small snapshot of it. Okay, VIX is volatility gauge, so as the stock market is going up, VIX is lower, opportunity is lower, trading ranges are smaller, and as the stock market goes down, the VIX goes up. So here we are. Here's the VIX, low, 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 and then picking up. Here's the stock market, high, 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 and then finally breaking down. So they're kind of mirror images. You can see when the stock market peaks out, the VIX bottoms out. When the stock market not bottoms out, but heads down, the VIX is starting to head up. So they're kind of opposites of each other. You can also see this trend line here as I move it back to where it was. Remember these dates. Here's the stock market in America topping out on the 14th. Here it is peaking out a bit on October 4th. So September 14th, October 4th and 5th, and then again it peaked out hitting that trend line on October 18th. Now I slide you over into the foreign currency charts. All right, that's why we're here. So let's just start out with one foreign currency chart. Let's start out on a daily time frame of the pound US dollar. Stock market has gone up in June and July and August and September and early October, and the pound went up over the same time frame. Let's bring it down now into a smaller time frame. Here's the 4-hour chart. Stock market starts to go down as of late into late September into October, and the pound starts to lose some ground. Here's my 1-hour chart. All right. So remember, the stock market topped out on specific days, so we need a little bit more data to look at it. It topped out in middle of September. The pound topped out. Then we had a couple more highs. Remember, in middle of October, October 5th or so, the stock market topped out. The pound then started to go down. And then just recently, on the 18th, 17th, 18th of October, the stock market reached a high and then reversed pretty significantly, and we reversed significantly in the pound. The U.S. dollar strengthened, all right? So when I move this down to an hourly chart, can I start to see some areas where, if I understand that relationship, can I start to get bearish? If I understand that relationship, can I start to get bullish and buy where I think it's dipping? So here's what it looks like, and you have some, remember, resistance. I'm not talking about very short-term resistance. I'm talking about a little bit bigger areas of resistance, and here you are in the pound, resistance topping out and correlating with the stock market. Stock market today bounced. If I take you back today, all right, the stock market actually went down today, but if we look at it on a very, very small time frame, it actually got a bounce near the end of the day, all right? So it went down, and then near the end of the day, we started to go a little bit higher. Look at what the pound did today. It went down during the U.S. session. This is right here, 1300 GMT time, 1400, 1500. This is the early morning during the U.S. equity session, and then we were oversold a little bit in the pound, and we started to bounce. So you need to use some relationships and some bigger trades starting macro to micro to say, okay, I'm a buyer now. So I'm not saying that you want to be a buyer down here, because looking at a longer term chart, do you see other reasons to get long here? So that might be a very, very short-term trade in a much bigger volatility day to day. But overall, is the trend now starting to go down where you want to be very careful buying and you want to wait for some bigger support areas? And you rather be a seller where you can see more resistance. So moving back to the hourly one chart, do you feel more comfortable if for some reason the pound popped up here and started to get high up in this area and you start to see resistance and resistance and resistance and start to be taking advantage of it? So obviously the trend changed. Resistance here and resistance here, the bigger move was down. It wasn't being long the pound, all right? It was being long the pound for a while, but now that the equity markets are starting to go down, maybe the trend has changed a little bit. I'll show you the same thing here on the euro. Start macro. Look at the daily chart, all right? This is the daily chart, and there's a lot of resistance up here. So you're keying in now on the bigger macro chart. Hey, there's a lot of resistance around 31.50. Then you go to your 4-hour chart, and you see that. So could you take advantage of that? Because remember the dates. September 14th, stock market topped out. October 5th, stock market topped out. October 17th, stock market topped out. Here's your resistance area up here around 30.5 up to 31. So you risk 50 or 60 or 70 pips to make 100, 120 pips, 200 pips as it goes down. That's a little bit longer term. Moving down to the 1-hour chart, again, can you see congestion up here? And maybe based on this and being aware of this high over here, you might say, okay, this has the potential to double top up here if equity markets double top, and that's what it does. So you get, maybe you get short here, you put your stop 30, 40, 50 pips above. As you get in around 31.20, 31.30, you put your stop at 31.50, 31.60, you risk 30 to 40 pips. And not just in one day, because these period separators are per day, but one day it's going your way, the next day it goes sideways a little bit, and then it starts to go down your way. So it turns into a little bit longer of a chart, but you're using kind of a more major area of support and resistance versus just a local area of support. This bounce here today, when the stock market bounced, that would be local. This is a little bit more major because not only did we top out there for a few days here, but we topped out a few days in the past. That's what I'm talking about, a little bit more major. This support line down here, that's more of a major support line down around 28. We've been there many times. To say that we're going to hold in at 29.50, that's a little bit hard. But maybe there's a little bit more support down here and we get oversold in that area, and that might be an area where you do more of a swing type trade, risk 20, 30, 40 pips to make 50, 60, 70, 80 pips if it can turn around at that level. All right, we don't know, but that's why we use stops and targets and we manage the trade. Okay, so that's using, and I said in the market description or in the paragraph, the marketing paragraph for this, I like trading short term. I like trading a little bit longer term as well. So I'm going not out of my comfort zone, but I'm just showing you that not every trader, this strategy might not be right for every trader. I'm not totally comfortable with it. I'm very aware of opportunities and trading plans that I can build in this, but it might not be right for every single person out there. Maybe you're not comfortable risking 30 or 40 pips over 2 or 3 days to make 50, 60, 70 pips. Maybe you want to be in and out sooner. Let's go to the Aussie dollar. What's going on with the Aussie dollar? Let's look at some major support and major resistance. Major resistance up here around 105. Major support, pretty clear to see right down here around, as I move my moderator panel here, around 101.50. All right, we can see we bottomed out here many times. So that's the major one. Can we find some more local ones as we start to go down here? Yeah, we might be able to start to see on our 4-hour chart. We definitely can see it down here. That's that 101.50 area that we talked about right down here. And can we see something up here, maybe a little bit of topping action here, and then you go down to your hourly one chart, and can you see something? Again, here's the equity markets rolling over. Here's the U.S. dollar getting stronger against most currencies. They happen together, so that's why those ancillary markets are so important. Commodities got beat up today, you guys, pretty good. Look what's happening, though, as we start to shrink down a little bit. We got a pretty good bounce this afternoon as equity markets came back a little bit, and then right now early in the morning in Australia, they're buying it, and so they're buying the commodities. They're buying it against the United States dollar. So commodities you might expect to rebound a little bit. Maybe the stock market will rebound a little bit. So can we come up? I want you guys to keep an eye on this as we get closer and closer. If we do, look at all of this kind of swing resistance right up here. By the time the Aussie dollar goes all the way from 102.40 to 102.60, 102.80, 103, 103.20, 103.40, is it overbought up there? And now you can turn this into maybe a swing trade. Use this area of resistance to go back down. Now, based on the relationship, if the stock markets around the world go up, 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 up big time, the Aussie dollar could climb right through. But if the stock markets pop up and they say, you know what, great, we got back some of yesterday's, but we can't get all of it back, we're a little bit tired up here, maybe the Aussie dollar says, after moving up 100 or so pips or more, I'm a little bit tired up here too. So keep an eye on that 103.30 to 103.40 resistance, previous resistance area to see what happens. Can you develop a trading plan out of that and turn it into a swing trade? Maybe if it's new for you, you can go ahead and do it on your demo trade. Or maybe you can trade it live, but just with a little bit smaller of contract size to test this out. Bottom line is you got to have stops in. You got to have targets in. You got to manage it given your own individual trading personality. Maybe you can't manage this, to the best of your abilities because it doesn't fit your trading personality. This may not be for you. Maybe that trade location comes in at a later time, but maybe someone says, you know what? I don't have that time. I don't want to babysit. It doesn't fit with my schedule. Maybe if it comes up here, I just risk my 10 or 15 pips to make my 15 or 20 pips. I turn it into a day trade. So the same day trader would use the same trading plan, maybe with a little bit greater contract size, because they're going to risk less pips to make a little bit less than the swing trader who might risk 30 or 40 pips to make 60 or 70 pips over a longer time frame. So we can still get into the same trade at the same time, pretty much for the same reasons. We may just treat the risk to reward of it a little bit differently depending on our time frame. All right? So I want you to be aware of that. Let's see if we can find another pair here, another commodity currency that a lot of people keep an eye on. And I said the Bank of Canada was active today. This was on that announcement. I think it was a little bit of a surprise that the Bank of Canada didn't offer some kind of what Bank of England did today as far as saying, hey, we're here for you, equity markets. Hey, we're going to provide some liquidity. The Bank of Canada said, we're holding firm with our interest rates. We'll look down the road, but right now we don't see any reason to be worried right now. We know things are kind of iffy out there, but we're not providing any extra accommodative stance right now. And so the United States dollar got really weak against the Canadian dollar. That's almost a penny move, almost 100 pips of movement right there. So let's see if we can go out to the macro and see what's going on. Are there any swing trading areas we can see? Here's the daily chart. I'm already keying on a little bit of support here. Here's the daily, here's the 4-hour chart. All right, look at this, you guys. Look at this area of day after day after day after day of support around 97.40, 97.50. So you bring it down to the 1-hour chart. Here's this area right here. Look at this. It doesn't happen too quickly. We're looking at a 1-hour chart, so 1 hour. Each bar is 1 hour. So look at all of this support down in this area. So you might be willing to risk 30 or 40 or 50 or 60 pips, but if you risk 30 or 40 or 50, 60 pips, it doesn't go down and it bounces and it goes from 97.60 to 98.30. That's 70 pips. It comes down, it goes sideways. You might be staying in the trade for a few days. 97.60, 98 again. That's about 40 to 50 pips. 97.60, 98. 98.20. Oh, right back down to 97.60 or so. Risk my 20, 30, 40, 50 pips. Boom, it takes off. So the United States dollar has been stronger against the Canadian dollar as of late. Equity markets are weaker as of late. Oil prices are weaker as of late. Oil prices got crushed today, you guys. If I can show you over here, I'm going to bring up the USO, which is the ETF that tracks oil prices. Look what it did today. It got crushed, I think, about 3% or so, where the S&P, the broad market, got crushed about 1.5%. So here's where we closed yesterday. Whoops, got a little excited there with the cursor. Here's where it closed yesterday at 32.80, and we closed today at 32. All right, we were down as low as 31.60. We were as low as we've been in oil going back to July of this summer. All right, that's when the markets were just starting to recover. So where are you looking at swing support, swing resistance here in the USO oil prices, basically? Maybe you're waiting for it to come down a little bit lower, but use those relationships together. So a question coming through. So I buy Aussie US dollar day only, and I'm just reading the question. So the question I think is, do I buy only the Australia US dollar in the short term? I think if I'm reading your question right, they're talking about the Australian dollar, US dollar, about buying it in the short term. I can go back to that chart for you, and you'll have to make the decision, I guess, to say, here it is, the Aussie dollar is going up. What's causing that? What's going on? Because obviously, depending on where you are around the world, you may not be trading this time frame, but obviously the Aussie is up and running as far as their banking day is going. So obviously we're getting some good early morning action out of what's going on there. So if you buy it, you have to ask yourself, if you're not in it already, do you want to buy it? It just went from 102.50 to 103. It just moved about 60 pips. Are you a buyer now, or are you looking for it to approach this resistance and maybe become a seller? You know, that's what I want you to be aware of as you're looking at this 1 hour chart, to see a little bit more history to it. All right, so I'm not sure if you buy it in the short term. Again, it depends on what you're looking for it to do. If you bought it about an hour ago, I guess you're pretty happy. But obviously now you have to decide your risk reward and set up that trade. So hopefully that answered your question. I'm not sure if it came across totally clear here in the chat, but you can ask it again if I didn't get it. But yeah, I mean, we're definitely seeing a little bit more action. If you've been paying attention to, look at the same time frame early in the morning. Look at the trading time frame, the ranges here yesterday morning at the same exact time in the Aussie. Yesterday, the day before that, look at the trading ranges. They're very, very small to start the day. And look at this trading range. Really, really, 50 or 60 pips is huge. So maybe it's starting to get tired after it moved 50 or 60 pips. So you have to take into account what's normally happening at this time frame, what's going on, where's my risk reward, and what am I looking to do. So going back into the PowerPoint slides, chart analysis, move from macro to micro, get your bearings, then look for some more, not just local, but more of your kind of larger, area, multiple days where it's hitting your support and your resistance. So examples, we showed you the US dollar, Canadian dollar, support and resistance band. Sorry about the typo there on the word support. Aussie dollar, US dollar, pound US dollar. Great examples to look for these these 1 hour charts, moving from the daily chart to the 4 hour chart to the 1 hour chart, keeping an eye on other markets and the fundamental, obviously, that are big and bold behind the market scenes there, as far as Bank of England and Bank of Canada and the Federal Reserve here in the United States, the ECB, all of them speaking, and then try and pick out an area where you see multiple days of support, multiple days of resistance. So to review, fundamental events, got to stay on top of it now more than ever, because it's just coming out from one person's mouth. They can move a currency pair 100 pips, like we saw the US dollar, Canadian dollar today. Technical analysis, trend, support, resistance. We're talking today about support and resistance, looking at seeing where other people are buying, looking at seeing where other people are selling. No guarantees, trading plans, stops, and targets. Swing trading, using the hourly chart, the 1 hour chart, but moving from macro charts, daily, hourly, 4 hour to 1 hour, and then looking at those support and resistance bands. Please be careful if volatility changes. Again, dailyforextradingedge.com, I wrote about there being indecision, not much conviction, lower volatility, and boom, a day later, maybe I helped the markets move by posting that article and saying, hey, be careful, and then boom, the markets move, and we have some big trading ranges over the past few days. Hopefully that will continue, because that's good for trading opportunities. That's what we want. So now we can review and have some questions, and while I go into the questions, I just want to put this up. I'll be speaking to you in about 2 weeks. Same thing, a fundamental analysis update, a little bit about trading psychology, technical analysis, understanding trends, support, and resistance, those key and crucial intermarket relationships. The main topic has yet to be decided, so be aware that'll be coming out. Hopefully you'll get the email from IBFX on that one. Education and recordings, you have my email. If you have questions, I'd be happy to answer them. IBFX.com is creating a great education page. Use that with the different collaborators. You can go to dailyforextradingedge.com and again read my daily posts that I get up there. And as I talk about the same thing, we're talking about this in 2-week chunks, but if you want it more consistently every few days or almost every day, depending on market action, I'm talking about what happened today fundamentally and technically in these intermarket relationships, showing charts, showing trend lines, showing Fibonacci retracements. So stick on Daily Forex Trading Edge for that. And then all the past webinars, including this one should be up in a few days, but all my past webinars are on the IBFX, Interbank FX, if you will, YouTube page. So lots and lots of places for ongoing information. So let me see if there's any questions to wrap up with right now. So someone's asking about, do you see an Elliott wave in the Aussie US dollar? I think it's going into the wave 5 right now. I got to admit, I'm not the biggest fan. I won't say biggest fan. I'm not the biggest user of Elliott waves. I think that actually I keep it really simple. I think actually Elliott waves and counting those out can get pretty complicated, and I like to keep things even simpler than that. But some people, like I said, use them, and they use them very well. So let me see. Again, I'm not totally, I might not be as proficient as you in wave 5, but let's take a look at what you're seeing. I'll go to the larger chart and see if I can find something here. So right now, just looking at the larger chart again, all I see is a major area of support here. I see resistance up here, and if I back it out even further, I see a major trend line that's hit many times right here. So as I shrink it down, all right, right now I'm here's support, here's kind of my resistance and trend line. I'm kind of in the lower quadrant here. So if you're talking about 1, 2, 3, okay, so let's say 1 down, 2 up, 3 down, 4 down. I'm not sure if that's what you're looking at, but again, I'm not really big on it. Am I aware of the rule of 5 and keep an eye on it? Absolutely. But let's just bring it down to my 1-hour chart. All right, let's just do this. Let's draw this trend line right here. Okay, we know intermarket relationships. We know that the equity markets have been suffering a little bit. We know lately that the U.S. dollar has been strong compared to other currencies out there. So even if you're not proficient in Elliott wave, you might be waiting for it to come into this area, and here's your swing trade resistance. You combine it with your trend line right there, and you get short around 103.10, 103.15. Put your stop 20 or 30 or 40 pips above using this resistance area, and hopefully it rolls back down. As I said, based on the relationship in the past, if the equity markets have a big day and rebound all of yesterday's losses, then maybe it slices through. So obviously you have to manage and keep an eye on other markets as well. So as far as the wave 5, I may not be seeing what you're seeing, but again, like I said, I'm not someone who calls themselves totally proficient in the Elliott wave theory. So if that's what you're using and it's working, keep doing it. Maybe you can combine. I'm always big on combining what you're doing well. Combine it with these intermarket relationships. Combine it with some other technical analysis. Combine it with understanding, hey, the bigger moves lately have been down. The Australian dollar has 2 steps down, 1 step up. 2 steps down. Is this a 1 step up where I can start to maybe get short or get heavy and think that this Australian dollar is going to turn around? Who knows? I think a lot of it depends on a lot of these speakers going on around the world this week, and also obviously on equity movement. So definitely a tough week because there's so much data coming out. So please be careful when it comes to your trading size with that as well. If volatility picks up, it's a good thing, but it might affect how many contracts we're trading because the possibility of movement as far as pips goes becomes a lot greater. All right, so a little bit of trading psychology to end there. So again, you have my email if you have any questions. You have lots of great education that IBFX is providing. I'll probably get a commentary out there for you guys tomorrow. Have a great trading day wherever you are. Thank you for your attendance. Thank you for your participation, and I'll look forward to seeing you in a few weeks for the next webinar. Thank you very much.